Hello, everybody, and welcome to week 3. You made it through week 2. You did your homework, read and did homework for chapters 2 and 3, which as a way of review, was looking at financial statements and starting to look at financial analysis. So, and that's just the tip of the iceberg, so to speak. The whole first section of the course is called about financial analysis. So, we'll get into a lot of other topics as well. Hopefully you did okay on the homework. If you, by now, the deadline is passed, so you should be able to go in and look at your assignments that you turned in, your problems that you turned in. If you got anything wrong, it gives you pretty good detail on terms of what you didn't do correctly or you might want to do differently in the future. And if you have any questions about that, after you get that feedback, let me know. But they actually do a really good job of referencing exactly what needed to be done in the problems. Okay, so that was then. We're going to go on to, in week 3, we're going to talk about chapter 4, which I'll talk about in just 1 minute. And as a reminder, I have times available still to do a one-on-one meeting with you if you want to do that. I think they're very beneficial to do. So feel free to go into the Google Sheets and sign up. Okay, so let's talk about Chapter 4. Chapter 4 introduces us to a very important part of financial analysis, which is financial forecasting. Popular to, or contrary to popular belief, I should say, financial forecasting can be a very complicated affair. It's not just simple guessing or wild guessing. So it's actually very, very important to do. And so some of the tools you use here are really designed to help do financial forecasting. Here's what I can tell you is that at least in a business setting, but most organizations follow these same rules, financial forecasting is the underpinnings of what the company is or the organization is trying to achieve through a strategic plan. So as you're talking about what your strategy is, it has to take form in financial forecasting. You have to be prepared to do and capitalize the things that you're going to do as you grow your organization. So the learning objectives for Chapter 4 are: you need to be able to recognize that financial forecasting is an essential part of strategic growth of the firm. Very important connection to make. Again, the higher up the food chain you go, you're really going to start talking about two different things, no matter what your function or discipline you're in. The two things that the leadership of the organization have to come to terms with are its strategy and how it's going to perform financially. So you want to be able to list 3 financial statements used for forecasting. You've had exposure to those in Chapter 2, but we're going to actually put them to a little bit of use now. We're going to know, you need to know what the percentage of sales method is. It'd be used for forecasting. It's done very frequently, even if it's not as sophisticated and precise as other ones. It's done very frequently, especially in large organizations. So don't be too surprised that you would come across that in your future. You want to be able to explain why the various methods of forecasting enable the firm to determine the amount of new funds required in advance. This is a really important aspect of financial forecasting. One of the major problems, especially smaller businesses, but not just small businesses, but especially smaller businesses have, is they're sometimes victims of their own success. And you can kind of wonder, what's that mean? It's like, well, they become very undercapitalized. They just don't have the funds required to continue to grow the business if they're growing at a rate that faster than what they had thought they needed. So this idea of being able to understand the amount of new funds you're going to need before you actually get into the growth mode is really, really important to be able to do, and be totally prepared to do it as you act on your plans. And the last thing you want to understand is the process of forecasting forces a firm to consider seasonal and other effects on cash flow. These are real things, and you can think of some good examples, I'm sure, as you go forward. But this is just a really, really important part of financial analysis. So good luck with it. I think you'll do fine. Most students find this topic pretty interesting, and quite honestly, I don't care what you go into, you're probably going to be exposed to, if not responsible for, doing some financial forecasting. Again, if you have any questions, don't hesitate to reach out and ask me. And the homework is due on Sunday, but I strongly encourage you to read through the chapter and take on the homework assignments early in the week, so that if you have any problems or any questions, you can circle back with me, which you can do. Certainly send me an email, D2L, please, not in the Gmail, and give me 3 times you can meet, and I'll make arrangements for us to meet in like Google Meets or something like that. Okay. All right. Best of luck for this week, and if you have any questions, don't hesitate to reach out.